So someone is US and UK citizen. They now live in France.
Mm-hmm.
And now that they've moved to France and they're working from France, they're working still through the UK company, even though they're not properly tax resident in France. And from what they're saying, there's no real substance in the UK. There's no staff in the UK that's like them working alone. So anyway, so they set themselves up as an auto entrepreneur in France in order to qualify for the Code Vital. So the question is, do you have any comments on this structure? More specifically, can it be simplified? Hervé, what are your thoughts? Just top line, just very generally.
My general thought is that if they want a Code Vital, well, it means they work in France, so they have to pay social contributions in France. An English company, a UK company, can employ someone in France without having any establishment in France. The case is well described, and we have solutions for that. What I say is, depending on the amount of revenue, a structure always generates cost. So if there is not such a great revenue, please make it simple. Because to work, you can work with the US with a French company. You can work with the UK. There is no problems with that. So what is interest at having a UK company? I don't know. Basically, if you have some permanent people working in France, it will mean you have a permanent basis in France. So for this part of the activity, you will be taxed under French laws. So really, what is the interest of having a UK company if you don't have any real activity in the UK? I don't understand. It seems for me a useless complexity.
Mm-hmm. So again, we don't. The person provided a lot of info, but it's not all of the info. So there are parts that we don't know. So I have a thought, because often I hear other tax advisors propose all these very exotic structures. Why not use Estonia? They want to use Cyprus. They want to use Malta. My thinking is, and give me your thoughts, please. If it is that there's no real economic substance in any of those other jurisdictions, won't the tax office in France then take the position that the structure can be set aside and everything be taxed in France?
I would first consider what is the objective of the client. It is not the same thing if you intend to spend 5 years in France and go back to another country, or if you want to stay 4 years and have your living in France, etc. Because usually we say we have a lot of heavy taxation in France, but globally French people don't live so badly. So maybe it's deferred revenue, etc. But if you're so first, what are the objectives? How do you see the future? And if you want to stay for a long time in France, we have very good financial products in France, and I can never be sure that a financial product from another country will be eligible to some tax reduction in France. I should say, if I had a client that would ask me, we would read together the tax convention. It doesn't say, oh, it is an IRA or Roth IRA, etc. It is, do you earn some interest? Do you earn some pensions? Is it capital gains? I would say it is very simple words. So don't try to do something too complicated if you want to change often from one country.
Patrick, any thoughts?
Yeah, I'm actually helping clients in the same situation. Americans that maybe worked 5-10 years in the UK, now they live in France. So I have investment licenses in the UK. So they have the same kind of pensions in the UK. It's a defined contribution, defined benefit plan, and then after Brexit, it's been really hard for British expats, or especially people that have those private pensions, to either cash them out or to manage them from France. So we do the same kind of rollovers. So we can help with their US IRAs, 401ks, but also I help clients with their British pensions. Then we can roll them over, manage them, for them, and then it's important to understand the rules. And when you move from the UK and the US, most people start saving when they're younger, and then when you save in different countries, then you have to know that there's different rules, so you cannot combine the accounts. So a lot of people ask, can I combine my UK pension with my US pension and my French pension? No, they all have to be separate, but we can assist them with that.
Yes, tax offices don't work together.
Yeah.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.